Hi, this is Mark with Mark with Right Line Trading, and this is our evening newsletter. And I want to start with this disclaimer that all signals and trading opportunities that the company provides are for educational demonstration purposes only. We take no responsibility for any profits or losses that our subscribers may incur. The most important point is that trading is risky and you can lose a substantial amount of money. And trading is not for everybody. Always carefully consider your financial position prior to making a trade, and don't trade what you cannot afford to lose. We are not registered financial advisors or licensed commodity trading advisors. Now, today was one of the most profitable days we've ever had in our options portfolio. And one of the reasons we trade so profitably is because we avoid what is a very, very common mistake, and that is using Japanese candlestick patterns, to predict the future direction of price. Now, when Japanese rice traders created Japanese candlestick patterns 400 years ago, they based them on the assumption that the power of each individual buyer and the power of each individual seller was equal. So that if they had 100 traders, 100 buyers, and 100 sellers, and 100 kilos of rice, and they were bidding back and forth, in the aggregate, those 200 buyers and sellers were all of equal power. That is not operational in the market today. Now, the market is moved by institutional money, and they don't give a hoot and holler about Japanese candlestick formations. If you use them to try to predict how price is going to move off the right edge of the chart, it's going to bleed out your account. Now, what I want to show you is the only consistent pattern that makes you money. And it is, first of all, every indicator must do a multi-time frame analysis. This shows that our higher multiple time frames are aligned to the upside. This is our market scanner. It's giving you an entry right here. But if you didn't take it, you can see that the market goes into consolidation. Now, consolidation is a critical part of market structure, and it tells us that in this narrow channel, the power of the bulls and the power of the bears is equal, and institutional money is not working. It is not operational at this time. It's simply buyers and sellers like you and I, small retail traders, try to push and pull on each other, and neither one of us has the power to overcome the other. So price moves sideways. Now, when is that going to terminate? Almost always when price hits, in this particular case, since it's a long move, when price hits support. Support is the mean close of the last 15 candles. Oh, excuse me, I'm really sorry. And from it, you're going to get a huge launch in price to the upside. So, market structure and the multi-time frame assessment and trend are key components of trading. If you abide by them and you can read market structure accurately, you can trade extremely successfully. If your indicators assimilate data from multiple time frames, they have future predictive value. And that is why we have amassed such a significant amount of money today. At least I have in my live money portfolio in Thinkorswim. The options positions I have are the options positions I send out to everyone in my newsletter. And our basic assumption is that institutional money rules. We always look to trade in the direction of institutional money. In the options market, that's evidenced by unusual options activity. And we look to take a trade out of the consolidative process as it moves sideways into support to the upside or into resistance to the downside. So we respect market structure and big institutional money. And you know what? You combine those two together, and that equals trading success. If you use Japanese candlestick patterns, engulfing patterns, dark cloud cover, shooting stars, piercing candles, they have no predictive power, because their assumption is that the small retail trader is in control of the market, and we're not. So it is as important to know what to avoid as it is important to know what to respect when we trade the markets each and every day. Our goal is to avoid losers. Our secondary goal is to get winners. We are up an enormous amount of money on Cleveland Cliffs, and we are still rocking to the upside. We have broken this pivot. We are above the 15. We are way above the VWAP. Everything is clicking for us. And I'm looking for a 200 to 300% winner on our options position on Cleveland Cliffs. Have a really wonderful evening, and I look forward to talking to you tomorrow.